All right, ladies and gentlemen, I hope you had a wonderful day. It was an insane day in the markets, and we finally got some relief after dropping 6 days in a row. But now the market is about to go insane as we are still pricing in 1.5% for the week. And now tomorrow we start getting the data and a lot of earnings. The crazy part about today, all of this movement, we were up even like 1.5, 1.7 on the NASDAQ at one point. This was off of nothing. If anything, it was the lack of news and lack of war headlines that helped us out a little bit. But you had a nice set of relief. It was questioned in the beginning of the day, but you solidified it, and now we are getting into the tech earnings, and everything is about to start kicking off. So, Chad, I have the plays, I have the recap, all the good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Walking to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Fingers to the down, hold it.
But right off the bat, like I said, we had that relief today. The only weird part about this morning that's a little different than what I was saying yesterday is that you didn't get any real bond movement. The bonds just did not go lower, so maybe, again, no news is good news. The fact that there wasn't any war headlines, that really calmed some things down, and it seems like we didn't wake up to any bad downgrades in chips and all of that worry on Friday. Today was just the first real day without any bad updates. So let's see how this week plays out. But remember, with how the markets are playing out, how the bonds are, a lot of people are worried that whole August to October thing. But during that moment, there was these relief pockets and bounces. It usually correlated with bonds. So the bonds didn't give us much here today, but the equities definitely moved. This is something I'm going to be watching for, and keep your eyes out for the lag. But like I'm saying here, the war headlines dying and the fact that the chip stocks did not go lower. SMCI was lower a little bit, then found a way to close green, but Nvidia was wrecked. People were talking about correction last week. Well, they bounced up 4 or 5%. ARM, they were down almost 20% on Friday. They bounced another 10% today. You finally had that calming down, and you just didn't wake up to everybody downgrading. So with all these earnings right around the corner, maybe everybody's now just going to wait until they actually report. So that's why tomorrow is going to be important, because now we are actually going to be waking up to stuff. And now this is what you got to keep in mind. You will have two different things to watch out for. The PMIs tomorrow in the AM, they can affect the bonds. And like I'm saying, the bonds didn't really move today. So we'll watch how this factors in. But other than that, everything from transports to consumer stocks, they're going to be reporting in the morning. You're going to wake up to LMT, RTX. That's Pew Pew Defensive, Spotify, that's consumer discretionary and technology related, then GE, General Electric, consumer staples, then General Motors, consumer staples, discretionary, depending on how you want to look at it, and then UPS and transports, and then after the bell, we're going to get Tesla, Visa, and a bunch of other companies. The point is now, you see how everybody was letting their imagination run just ahead of earnings. Imagine what's going to happen after we get these numbers. They're either going to be good or it's not going to meet the mark, or maybe I don't know. It's been early. Maybe people start saying it could have been worse. But then again, if it was better than expected so far, it even has sold off if it has not been stellar. We even had a little bit of that after the bell today with Cadence, but SAP found a way to go up. But all in all, we will be getting a lot of info, and now tomorrow will be the start of info in terms of earnings, and then now some of the data. But as far as economic data is concerned for this week, it seems like the most important data sets are going to be GDP on Thursday and then PCE on Friday, and then you get the mega cap earnings around Wednesday and Thursday. But watch out for that. The final point, your final key of the day, man. The relief is strong, but it's not real, man. I'm on the plane. The people are not real. The rally's not real. No? Okay. But what I'm trying to say is that you have a lot of upside after how much we sold off. people are kind of getting optimistic. People are talking about buybacks, and then it's going to come back on and front run, and then the earnings, and people are saying a lot of different things, and today was good, and you can really rally if we are going to have that upside. But here's the thing. Today was just your first day after 6 days in a row, so none of this is going to be permanent. Depending on how things play out by the end of this week, if all the data from PMIs to GDP and PCE and all of these earnings do not play along and it leaves us with a bad taste in our mouth, then whatever you see today, we could be quickly back under 5,000 and doing that whole dance again. Otherwise, if things do good, this is going to come when we talk about the plays here. A lot of people are saying, man, if you really wanted to buy the dip and you wanted to get some of this upside into the end of the year or the summer, if these earnings are good, this is going to be a great opportunity to take advantage of those discounts. So the bull and bear debate, as usual, we'll find out, but there is definitely a lot riding on these earnings. So now, let us get into the plays. So, right off the bat, I hope the keys you guys are prepared for tomorrow, but I got to start with a lot of earnings. So it's going to be one thing watching some of the global tension plays. I'm still in that gold play. I would watch out for oil and all that stuff, but now as we start getting into earnings, a lot of people are asking me about the watch list title. If you didn't know, this week you are having over 30 companies worth over $100 billion reporting, and then over 40% of the S&P 500 is going to be reporting. So we are going to have a lot of plays. There's going to be a lot of earnings. We are still doing the previews. I'm making y'all work a little bit, but that's my first play here. What I decided to do today, I went with these three plays: UPS, GE, and GM. They all report tomorrow, all related to different industries, but here's the deal with all of them. They have all either moved a lot. I'm talking 30 to 50% in the quarter, or they're at like a key level after selling off, aka UPS, and they were only pricing in 5% for earnings. So the way I'm looking at them, one, I made plays. I did the 2 standard deviation plays both ways. So if you guys were there today, I did make plays, and here's for reference. We went over the pricing. I grabbed GE 133 puts and then 167.5 calls. For UPS, I grabbed the 128 put and the 162.5 calls. Then GM 39 put, 48 call. And like the strategy, how to price in the options, the ghetto standard deviation, all went for next week, and I try to keep them at an affordable price. I don't think I spent more than $70 both ways, but here's the deal now. Why I decided to play all of these, they weren't pricing in a lot, so either they surprise and we hit on these earnings plays, but even if we don't hit, I would watch out for the post earnings. They're all related a lot, and like I'm saying, they've either moved 40-50%, UPS hanging around that $100 level. I think there's a lot of interesting thing happening, and so far, the post earnings have been the best type of earnings play, so watch out for that. That is play number 1, 2, and 3, I guess, depending on how you want to look at it, but play number 1, then play number 2. I'm sure a lot of people ask me if I'm going to buy this in the long term. I'm going to wait a little, but Tesla, and now they have earnings after the bell tomorrow, but here's the deal. They have only fell 7 days in a row, twice in their history, and now this is their third time. They are down 7 times, 7 days in a row, and the 2 other times that they did that, I think they went up 50% and 100% within 2 months. So it's at a very pivotal spot at 140. There's a very interesting streak going on. They have earnings, and like I'm saying, maybe it's all priced in because they already have their delivery numbers, and it's been selling off since then. So we're going to find out, but this could be interesting depending on how it trades, both with the history behind how it's moved and now depending on how it reacts at earnings. And then if it really starts moving crazy around this $100 level, I would definitely keep your eyes out for Tesla. But that is play number 2. Watch out for that. And then finally, play number 3, bro, AMD. And buy the dip, ? And what I'm saying with that, man, is simply this is for the logic that we were talking about just a little bit with everyone saying, yeah, well, there's been this pullback, and they're saying, no, earnings is going to be good. This is all going to be a blip. The earnings are going to be good. And, like, this is your, 5.5% pullback to get a discount. Well, if that's the case, you got some laggers and leaders, and believe it or not, AMD is weirdly lagging. We talked about this one the other day, and I keep bringing this up, and I just don't forget about this. Look at companies ahead of earnings. You should be able to noticeably see where their last earnings were, but like AMD is trading well below that. So some names have either came up to the top end of their earnings or the bottom end. They've either came out to the top or, again, fell to the bottom or fully recovered it. But like I'm saying here, I would watch out for this. And if we actually are going to get a dip and that optimism is going to be there, AMD stands out, right next to NVIDIA. And, they got a lot going on. It sold off considerably. It was just a couple days ago, it feels like. It was at like 230, but watch out for that. We'll see what happens. Otherwise, I'm still in my chip plays. Again, I try to front-run chips and got marked on the Marvel and Intel. Actually, no, I got out of Marvel. It was Intel and the ARM. That was the other one. So we'll see how those play out, but other than that, still riding those. My gold is doing well now, so we'll find out how those plays. Like I said, I'm not going to close it until I'm ready to get out, but I think we're going to get a lot of drama and realistically war headlines. That has been the biggest driver there. Otherwise, keep an eye on oil, but for now, it does seem like we are fully in earnings mode, so let's see what the data and earnings gives us. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post our watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, if someone's right next to you, they don't gotta yell, baby. So listen to the whispers. He's with you, baby. Oh, my goodness, San Antonio. I hope you're ready. Get locked and loaded. It's earnings, and drink that water. Stay hydrated and healthy. I'll see you in the AM. And welcome to the middle of April. It's almost done, and we're about to get into summer. But, Chad, I love you, and I'll see you in the morning. Horn.